Geoffrey Dennis is with us, independent emerging markets commentator, is joining us. Geoffrey, great to have you with us here. Thank you very much for your time. Just your thoughts. I mean, the basic question is, has it settled down? And the panic is kind of behind, at least in the very near term, is behind us. But there is also another strain of thought. And you must have seen this, right? When you have this degree of volatility, history suggests that there is another wave. There is a second wave which happens at some point. And usually that is bigger than the first. So how do you address that as well? Your thoughts?
I'm not sure I would rely on there being another big wave of volatility. We can't always expect history to repeat itself. But clearly this week, with the retail sales numbers in the US and both PPI and CPI, there is scope, I think, for there to be some surprises. Looks like CPI for me will be pretty flat at around 3%, which is i.e. in line with what it was in June. My gut feel is that most of this sell-off is over, and I think that it's been an air pocket that the markets have seen. And obviously the unwinding of this carry trade involving the Japanese yen played a big role here. The BOJ doesn't look as if it's going to raise interest rates anymore at the moment, and so that will help, I think, to support markets. So I tend to believe that this is another very good buying opportunity, certainly for the long term, although I think we need to get through this week's data before we can be sure exactly where we go in the short term.
Hi, Geoffrey. Good morning. Good to see you. Well, let's focus on that yen unwind trade. Various guesstimates is what we have been hearing. Do you think majority of that has already played out? And in that sort of a backdrop, what do you expect also, what are you looking at from the Fed? Because just maybe 20 sessions or so ago, we were not factoring in any big cuts. But now the street seems to be pricing in a 100 basis point cut by the end of this fiscal. So comment on both the yen and what the Fed does.
I do think that the bulk of the carry trade unwind has probably happened. I don't have my own independent estimates of that. Of course, I think if we were, as I said before, to get a Japanese yen, a BOJ rate hike soon, another rate hike soon, you might see the yen go up further in the near term because, of course, the yen historically is very, very low. So there's clearly scope for more yen appreciation. But I think given what's happening on the monetary policy front in Japan, I think it's unlikely we'll see a big move at the moment. Now, as the markets calm down and we start to see a nice rally off the bottom, although we're clearly still far off the top of the market as we were, let's say, 2 to 3 weeks ago, I think we're back in the situation the Fed will move rates in September. There is very little chance, I think, now of an intermeeting cut, which I think a few people thought would be the case. I think there's a decent chance it will be a 50 basis point cut in September, but my base call would still be that it's going to be 25, and then possibly another 25 in November, another 25 in December. So I don't think, short of the US economy showing more significantly weak data, raising the risk of recession, I think the glide path that inflation is on, slowly towards 2%, suggests probably the Fed is not going to panic. They're going to move slowly, and they're going to start in September, and most likely they'll start with the 25 basis point cut.
Right, a 25 basis points cut is what you're expecting, Geoffrey. I just wanted your thoughts on something like whether there is case for a 25 basis points cut even now, because I was hearing a bunch of experts. They were saying that inflation is on a downward trajectory. The economy hasn't weakened as much, barring a few data points here and there. And typically the 3-point plan that any central banker has, one is to tackle it through commentary, second is to tackle it through open market operations, and it's the third one which results in any sort of rate change. Do you think we're done with the first two now and a rate change is imminent, or maybe we can dabble with the first two as well?
I don't think we're through with the first one at all, because Chairman Powell, the last time we heard from them at the Fed meeting in July, earlier this month, I should say, last month now, that, it was an open question whether they would cut rates in September. We're going to know more, I think, is when we hear what Chairman Powell has to say at the Jackson Hole Fed meeting later this month, which is always a very, very important meeting. So I think he's going to tee it up then. And I think that's going to be the point where he's going to make it pretty clear that they're going to reduce interest rates in September. But I don't particularly think they're going to move any faster than that, unless you get a resumption of this intense market volatility. Now, of course, the Fed always says they don't react to the markets and they react to fundamentals. Yeah, except the markets, if they fall a lot further, could affect the fundamentals. So at this point, with the market settling down, I think you've got a 25 basis point cut in September, most likely. And I think the data, for me, points towards slowdown, not a collapse in the economy. The payroll numbers possibly overemphasize the downside. Unemployment is still relatively low. So I'm still in the no recession camp, frankly, although the chance of recession is obviously increased. And I think if we stay in the no recession camp, with inflation gradually moving towards 2%, but it'll take some months still to get there, I think this is a case for gradual rate cuts, not for a panic reaction with a 50 basis point cut or even bigger than that at this next meeting in September. But we need to watch what Chairman Powell says, because he will tee this up in his Jackson Hole speech later this month.
All right, Geoffrey, we'll leave it there. Thank you very much for your time. It's a pleasure having you with us here on CNBC TV 18. Good conversation, as always. Geoffrey essentially saying that, according to him, this event of global volatility is behind, and perhaps it's a good buying opportunity from a long-term perspective.